Check it out. We're going live. Costas Verde Show. We're going to talk about Bitcoin price being extremely boring. Bitcoin price is being boring, and it's leading into FOMC Jerome Powell speaking when big whales like to piss around volatility-wise with major stocks and crypto nowadays. And so my YouTube video yesterday, it went over the idea that yesterday and today's price action is simply being massaged as a setup. So if you've ever seen volleyball, you have a set before you try to spike it. That's essentially the set. And therefore, nothing really is happening. But we'll probably do a shorter Bitcoin version today. And then I'll do a little bit more questions. So I won't, because there's really not a whole lot to talk about in Bitcoin price right now. But I will give you key levels. So for the recording part of this, Bitcoin is doing absolutely nothing. Per my yesterday's Bitcoin video, it's just all a big massage waiting for the FOMC event. And I do have some ideas about this orange line right here. The massage of price and why it's so boring is because I don't think price wants to go too far away from this, either to the down or the up direction, because of it would create too many limitations on what large players could do with Bitcoin and thus crypto. So the closer to that orange line up here, the more wiggle room they're going to have to create volatility within crypto. So let's go see why this line is important and what we can expect during New York time. It's about 2 p.m. on Wednesday, September 21st. So let's go get some Bitcoin. All right, so we're staring at the chart that I've been running live for my Discord and YouTube Cryptillion tier. So since yesterday, this is pretty much all price is done. If you want to take a look at how my lines have worked. And again, I haven't readjusted these lines to what price is done. My lines were already here before price did all this, right? So let's take a quick peek here and let's do a replay. Got stuck under that macro channel orange line. Got rejected by the monthly line, the blue. And found support from other monthly lines down here. So essentially it got rejected from the monthly cliff / the top of the macro channel, which I'll show you what that is. I'll zoom out. So piece this all together. Right now we're really zoomed in, right? And all these lines are missing context. If you're not a regular viewer of my channel, it's like, well, how do I put these lines? And you're like, what the hell? How did you know that was significant, right? And why would price, do something strange there? So for a quick context, I will do the two lines of main interest are the macro channel top line, which is this orange line. And I'll show you that first. And then second, I'll show you this monthly cliff / monthly, it's now resistance, but support resistance line and why this box is here and why it's significant. So let's go ahead and go. I'm going to go to a different chart. And again, just the concept here is this is way zoomed in. So it's missing the context, and I'm going to show you the context right now. Here we go. And I'm going to stop drawing random lines on my chart, take off the EMAs, and put on what I call the macro channel that goes all the way back to the 69K top in November of 2021. I'll go to the 4-hour chart on Bitcoin to show you this. That should give me enough of the price history to get to the 69K top. Yep. All right, here we go. So here is the 69K top right there. Almost building up to a year ago. And you just a quick look. I mean, Bitcoin has been in here the entire time outside of one bull trap and now 2 bull traps. Okay, that's what just happened, right? And we're going to zoom in here. And so I'm going to go to, we can stay on the 4-hour chart. So just look, it fell back into the channel. So this isn't bullish. Got rejected by an origin line, which has 12 years of price history. All right, got rejected by that, fell fully back in, then got rejected by the top of the line. So it's very likely going to work its way down after Wednesday / Thursday. So tomorrow there's going to be volatility both ways. It's not going to give two shits about that line most likely. It's just going to swing above it, swing below it. Just crazy stuff's going to happen. After the dust settles from FOMC, though, with the assumption that it's a normal volatility day, after Thursday, I could see boom, boom on Wednesday. And then, on Friday, it finds itself here. And next week, it starts coming back in. So that's what that orange line is on the other chart, way, way, way zoomed in. But you can see right here, this doesn't look bullish. This isn't bullish at all. All right. This is the where's the 17,000? So the $17,500 low is way over here. Right. And so if we zoom in here to the 15-minute chart, that would be simply touching the first line down. And once you break back into a channel, you typically hit the point of control. And so it would make more sense if I zoomed out to show you that. It usually makes more sense to hit the point of control. All right, once you dive back in. And the point of control for that, bam, it's down, it's well below 15,000 bucks. If it were to get down there in a hurry. All right. I'm not saying it'll get down there, that fast, but over time I could see it hitting 12,000 bucks, or potentially writing this, or let me make this origin line right here a little brighter color because it's going to be in play soon. So it's possible it doesn't hit this orange point of control. So this orange guy is the point of control. It's possible that stops here at around 14.8 and finds support on this origin line right here. That goes back 12 years in price history and is parallel with the most important straight line in all of Bitcoin history. It's not the most important one. It's parallel to it. That's part of its channel. All right. And then zooming back into the 15-minute chart, now that we have the context, boom, 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 get rid of all these. I zoom in. I know it looks messy. It'll look better once I zoom in. There we go. Now we can see what we're dealing with. All right. And so that's the significance of this orange line. And you're seeing it way, way zoomed in. And this point of control right here is of the micro channel. So we are looking at Bitcoin in a channel, inside of a channel that is inside of a channel. I know that sounds stupid, but it's a micro channel and it's working very, very, very well right now. And I think I have to go to the 1 hour chart to see all of price within this micro channel. So this micro channel fits within the greater channel. Am I making sense there? And once it breaks below this line, okay, down here somewhere, then all I'd have to do is what? Refer to the macro channel. That's it. But until this micro channel is broken, I'm going to use it. And I'll probably go to the other macro chart just for, context. But as of right now, it's just the top for the macro channel, the orange line that I have within the micro channel that I just showed you the context. That's really the only one that's in play. So I'm just looking at that line right now for the macro. I'm not putting the macro chart inside of this as well. This is all I need to look at for the most part, outside of the orange line, which is the top of the other channel, until it breaks out of here. Make sense? All right. And if it breaks to the upside, well, then it's going to break out of both channels at the same time. And then I'll just have to figure out how to do a different type of structural analysis. All right. Now, so for Wednesday, I don't think that price is going to want to get too far away from the orange line. So this is the top of the micro channel, and the macro channel one, the zoomed out version, is way lower. You see that? And if price gets too far away from this, then you're going to have a lot of support down here and monthly support that I'll show you here in just a second. So I think that Wednesday by 2 p.m. price should be somewhere close to here or to this monthly cliff, because that would allow price to have max volatility range like this for a 10% range. But if you're too close to monthly horizontals, then the volatility play to the downside, other bigger players who aren't a part of their plan will create too much buy pressure and would create risk within their plans to piss around with Bitcoin price, right? Because there's a lot going on here. So let's take a look at these. This box right here, that's around 18.7 or so, 18.5 to 18.7. And then we'll look at it up here at around 19.5. So around 18.5 and 18.5 and 19.5 are your monthly plays, and I'm going to go to a different chart to show you the significance of that. So here's the monthly chart. Boom. I will take no, I will take off the macro channel and take these off. Here we go. So let's zoom way in here. What did I say, 18.5 and 19.5? All right. So the top of the lower blue box, the top of it is made by this monthly wick down right here. All right. It's a $200 range. The blue box is down to here. That is made by a low that happened. Actually, where did it happen? Maybe I have to go to the 15-minute chart to see it. Maybe the 1 hour. Where did it go? Yeah, it's made by this wick that didn't really show up on the monthly for some reason. So the wick low right there. So it's about a little less than $200 range, and I'm considering that a monthly horizontal. So that's the context of the blue. And the idea behind that is why that's significant is if, price is breaking below, it's already, just look at these candles. This isn't bullish, right? You have 3 months of like a straight line here, and we're below it. So if you go below this like last front, this is like the final frontier, because it's just going to start free falling. I think it would actually ignore this wick low from this month, the month of June. So if you start going past this last area of support here that's going to be defended by the bulls, you could really start accelerating down, right? And then this month closes in 10 days. You might not hit this next origin line down, but if it does in this month, that's 14,500 this month. And it would be a big, big wave down. And monthly candles have done that in the past. It can really, really start flooding, especially with a stimulus like a 100-point rate hike, or even a 75-point rate hike with Jerome Powell being, really hawkish and saying, hey, if it doesn't come down next CPI report, I'm going 100 or something like that. Even if 75 comes out, but when he's speaking, he gives, he speaks about not slowing down anytime soon. It could really cause a flood down. All right. And the monthly upper line, where was I getting this? I might not be able to spot this very easily. 20,000. Or was it just the monthly open? I think it was just the monthly open. 19. Yeah, it was. Did I say 19.5? Let's take a look. $19.5. Yeah, so this is just those monthly open, the tops of those bars. That's why it's significant right now. So there's a lot of overhead resistance. You have a macro channel line, which is this orange one. You have monthly stuff in play, and you have the top of the micro channel. So top of the micro channel, top of the macro channel, monthly horizontal, which has been broken and is now resistance. You have triple resistance there. And again, Wednesday could go pierce right through it, then come back below, because Wednesday volatility might ignore this to a certain degree. But in general, for normal price action outside of whale volatility around FOMC, that's a lot of resistance up top, a ton of structural resistance. Not to mention, you have things like the daily 10 EMA, that price is way below, and oftentimes you can rally right up to it and then make a lower high on the daily time frame and come right back down. So you have the daily 10 acting as resistance as well in the same area, right? Micro channel top, macro channel top, monthly, and then the daily 10. So now you have four things, and 4 different groups of sellers would sell in the same area for totally different reasons. It's going to be hard to get above 19.5. But if it does, that could, so if 19.5 is broken, and this is probably what I'll end the Bitcoin portion of this live stream on. If particularly the Tuesday candle that we're on right now, if it closes above here, and this is roughly the daily open for Tuesday. So if price gets back above here within the next hour and 40 minutes, the day will be green. It'll go from being red all day, and end of day attacks happen, right? And it would turn green right at the last 30 minutes. Like if you start seeing price spike up, New York time, 7:30 p.m., or within an hour after I'm doing this live show, the micro and midterm timeframes could really turn around pretty quickly if this day closes green, and let me show you why. And then we'll probably be done with this portion of it. This is really important, a visual of why this monthly cliff is not just important from, why is it there, but if price gets back above here, particularly today, why is that a big deal, right? It really would be a big deal. Let me go to a cleaner chart. I'm going to go to the daily. Check this out. So it would be a candle reading. And the Japanese, or just, farther East Asia, they read candlesticks a lot more, and their market opens around candle closure. And so if this flips green and Far East Asia starts coming online to start trading crypto, they're going to see they're going to see a pretty big downturn that was bought right back up. So they will see bears doing a lot of work for the bulls to overcome them. Bears doing a lot of work for the bulls to overcome them. And you'll have a green candle with 2 long wicks down. And they're going to interpret, the bears are doing a lot of work to get less done. The bulls are getting ready to take over in the micro timeframes. And it could cause several daily green candles in a row, potentially, if that were to happen, particularly today. Am I making sense with what I'm saying? So just imagine this red candle right here is green compared to after this guy. Hopefully you can see the wick on this. So if this were to flip green, imagine this is green up here after this day. That's a big deal. And you'd probably get one. Yeah, I think you would easily get 2 green days in a row. Would it go super high? Maybe not. But I think at bare minimum, it would go up to this origin line and outside once again of both micro and macro channels. I think it would go above both of them right there. And then let me put on the 5-day chart. So if the 1 day would cascade potentially to a move up to here, that could potentially cascade another trigger, 5-day. That would mean the 5-day flips green as well. And imagine all this red stuff just disappears and this turns into a green wick, kind of like this wick here. So imagine all this area of consolidation with a red wick below it. So this line, a red wick below it, a green wick below it, a red wick at it, a red wick below it, and it flips green. That could create multiple, like that could get you multiple 5-day candles that are green. And it could all be stimulated by an end of day attack today. But it would probably have to, so just getting above that monthly line that I talked about, I think it was 19.5 or so, getting above it after the candle closure is probably not going to cause the same effect because the candlestick reading the interpretation won't be quite the same. Get my drift? So if it happens soon, it could cascade into a big deal, and that could send price up to 23K. But I'm not saying that that's the most probable scenario. I'm saying that's something to look out for, and that's the only real interesting thing that I see as a potential future play of the of essentially traditional finance whale algos. They might, I'm kind of interested to see if we're going to get an end of day attack today, because it'd have huge implications, and that is the Bitcoin portion of the live stream. So I'm going to start answering some questions. And Ethereum's not doing jack shit either, so there's no sense in oh yeah, I like my shirt. Yeah. Hello from Texas. Hey, Larissa. Yeah, it's a bling shirt. All right. Good evening, sir. Okay. So Chris Crane. All right, cool. And for newer folks to my stream, if you ask a question and I skip over you, it's most likely because I'm skipping to the questions with the emblem next to the person's name, right? Because I have YouTube tier folks who I guess pay to be a member of YouTube, and I get to their questions first. And that typically takes up my full time here on the live streams to get to them. But if I get through all the members' questions, and then I'll go back up and get to non-members' questions, all right? But I will give them priority first, all right? As one of the benefits to being in the YouTube tier. All right, here we go. Chris Crane, YouTube tier member, asks, the question I have this evening, I've put some extra money away in Luna Classic. What do you think of the chance of a long-term recovery is, and opinion on the 1.2% burn being accepted by Binance? Well, that's a lot of questions in one. Let me look at the chart first. I didn't save that shit on here. Oh my gosh. It actually doesn't look bad. It's still above its weekly 10. So from a macro standpoint, it's just fine. Daily. You're getting ready to have a daily bearish squeeze. Yeesh. So let me let you vision this a little bit more. Take that off, put this on. Go here. Inputs 10, 21, and EMA fill. So this is getting ready to cross to the downside. And usually when, after a big run, this squeeze, if it does indeed cross, so the daily 10 goes below daily 20, that can cause it'd probably hit a trend line like somewhere around here. Let me put price back on. Yeah, so that'd probably send price over time closer to 0014. Yeah, because a lot of buyers won't step in until about this point anyway. And that would create horizontal support here as well. So yeah, that would probably be exactly where it goes. It's looking like it's getting ready to pull back, actually. But it could undo this. It could avoid this cross and do another push or two. Let me take one more look. Let me look at the 4-hour chart. Take this bad boy off. Look at the EMAs. I mean the RSI. Your 3 strikes of bearish. So you had 3 lower lows on 4-hour RSI, 3 higher highs on price at the same time. 1, 2, 3. See that? 1, 2, 3. And it's already played out. It's hit the red. Honestly, this looks like it's gonna do a higher high to me. I think it's not gonna allow that cross to happen. I think it's gonna go for it again. I think it's gonna make a higher high. I actually do think that. Let me look at a different time frame. With the time frames I've looked at so far, gosh, the 12-hour doesn't look bad either. The daily's got some work to do, so it might go sideways for a bit. I think it's got over a 50% chance to squeak out another higher high. Might not be too aggressive of one. Might not go up crazy higher than its previous local high. 50% above if it does. I think it could squeak one out. All right, so what's your question? Long-term recovery and okay, so a burnonomics don't work. Like go look at YouTube and type in a Comey burn. And start looking at shit from like February. So try to filter the time because you could put filters on the search, right? Try to do time frame and select your time frame. February of 2021 through April of 2021, and all these geeks out there, the Omi's burning millions, and it just kept going down. So burning does not change the order book. The only way that burning can take any immediate effect are speculators who think it's magically gonna like cause something, but then sellers will come in and show them that it doesn't work, and then it doesn't do anything. There have been cryptos with burnonomics since 2016. I mean, there was a crypto called Bomb, and it was one of the big ones that it might have been the pioneer in that concept from a very aggressive standpoint, right? And let's take a look at where that is now. But it's been tried before. Burning, like it's a long-term thing, right? It won't, like the supply won't. So it's literally log all. Yeah, so it's essentially at zero. All right, went up to 12 bucks, and now it's at 16 cents. I'm pretty sure this was the crypto I'm thinking of. Yeah, and it was the Burnonomics theory. So I think, I don't know about Binance accepting it, but the only reason why that would make cause price to go up in the short term would be speculators thinking it does something immediate, which it actually doesn't. Money effects of money supply, especially only 1.2%, is not even a money supply shock. And even if it were big enough to be a money supply shock, the effects of that aren't felt for a while, right? So like in the United States, all the money printing and European countries and all that, it took about 18 months to see the effect. And I was surprised it happened so fast. But yeah, anyway, but that's my answer to that. I don't know anything about Binance. I don't have any opinions on that because I don't know anything about it. All right, but I don't think it'll create a big difference. All right, Trias. All right, well, let's. I got asked about Trias before Kadena, so let's go cover some Trias price action right now. Let's go get it. Here we go. Trias, has it gone back? I'm kind of interested to see if it's gone back under $1. I haven't looked at the chart for a while. It is under $1. Okay, all right. Well, so a lot of people on my Trias videos have made comments, it's never going under $1. That's not possible. And those comments have been very recent, right? And, I've seen a lot of comments from confident, newer people to, new people who are relatively new to price action and charting, be extremely confident, and and I'm typically not worried about it because, but just realize that a lot of people just said this is impossible, right? Where do you think I'm going with this? If it did it once, it can do it again. So this can go a hell of a lot lower than what you're thinking. A lot lower, especially since this is making lower lows while Bitcoin's not. So when Bitcoin takes a leg down, this is already free falling. Before Bitcoin starts free falling, this is going to go way under my original target of my interest, 70 cents. This is probably going to go a lot lower than where I originally, when price was still at $12. I kept saying like 70 cents to $1 is probably where it's going, or wherever Trias was at the time. From like months and months back, 6 to 8 months ago, I was saying under $1. But now I'm probably going to readjust that. It's making lower lows while Bitcoin's not. It's in a free fall. It's going to go below my target, right? But just how low? So people thought this was impossible, that what we're seeing right now, under $1 again, or under $1, right? No way, it's too awesome of a project. But look, if it simply falls back, let me go to, this chart right here works. So look, it spent its whole life in this channel, it came out, and it's going to fall back in. And if it only goes halfway down, that's 28 cents. It's possible that it uses the top of this channel as support, which actually that's pretty reasonable. But still, if it comes down for a month and a half using this as support, until November, okay, well, that's still 34 cents. So my original guess of about 70 cents, I'll probably be 50% off because it can't hold a higher low as Bitcoin is. As Bitcoin has a higher low. This is concerning. So this means this lower low, as Bitcoin's kind of hanging on by a thread, barely, it means it's going to, my target's going to be wrong. It's going to be too high. It's going a lot lower. Yeah, it's going to break this. And that's why I started off with the idea that a lot of people thought this was impossible. You might think it's impossible to go under 70 cents. Well, I'm telling you, you can think it all you want, but you're going to see the impossible become reality, or what you see as impossible. To me, it just looks like normal price action because I know how my channels work. And I know that a lot of things are So even though this is a Trias analysis, just look, I mean, there are tons of charts doing this. So they had a macro channel back from, Bitcoin 69K top, and they're working their way out of it, but most of them going to go right back in. So Chainlink, I know, is one. If we go to Chainlink, take a look here. So very similar to Trias. Look at the similarities. A big channel recently floated out. Now it looks like it's heading back down to it. See that? Now let's go back to Trias. So remember what this looks like. Stare at it. It's almost the same damn thing. And it's all because of the merge. Without the merge, this wouldn't have happened. I'm telling you. It would have, like, all these cryptos would have stayed in their channel. And our bear market would be a lot farther progressed right now. Yeah, so right now, Trias, without the merge, Trias would be under 66 cents. It would have already hit my target. So immediate price action, I mean, it's going to hit this pretty soon. I would say maybe before October 1st. Let's see. All right, sorry. I don't sneeze very often when I'm on camera, but that would be a pretty aggressive pull down. 30% in 11 days. Bitcoin would have to really start falling down. Bitcoin would have to be like under 17K for that to happen. But if Bitcoin falls off that monthly cliff that you saw in the first part of this live stream, yeah, Trias will go down 30% in 11 days if Bitcoin takes that plunge after the FOMC or even the week after, next week. It would get 30% down within 11 days from today. So keep that level in mind, and just realize structurally this is what we're looking at. The Ethereum merged allowed it to get out of its macro channel. It's likely going to go back in, but it does have a chance to use the top of this channel as support, but it's still going about most likely 50% under where I thought it was going to have a chance to bottom, around 70%. Even if it doesn't enter this channel, it's going to use it as support and it'll still go, below 50 cents. So that is Trias for you. Sorry. And again, I'm not sorry. I'm here to tell you what you need to hear, not what you want to hear. So get used to it. Now, during a bull market, I will clickbait the shit out of everybody with thumbnails and titles, but I'll start the video off by letting you know that, this shit ain't going to $1,000, right? Even though in that my $1,000 Trias video, I said it 5 times. This is not probable, but I still get shit for that today. But I will do it again, but I'll be clearer. I might even make a sign, not probable at the beginning, right? But right now, I'm here to tell you what you need to hear, not what you want to hear. All right, rock and roll. Yeah, and I kind of understand how YouTubers, on that note, let me go on a tangent. I do understand how YouTubers can get caught up in, promoting shit coins and all that stuff because, and saying massive numbers like Chainlink to $700, which is a large YouTuber, had that thumbnail and did a video about that during this bull run, similar to my Trias $1,000, right? But during the video, a lot of them give all the reasons why and don't say 5 times in the video. It's not probable. But if it got to $2 billion market cap, which a lot of things do, then it would be at Trias would be at $1,000. But I understand why, because the YouTube algorithm, it likes it when you give people what they want. And if people want to get rich tomorrow, that's kind of the content you got to give them, or it's going to hurt you. So I mean, so I think the only happy medium is to make people happy with clickbait titles and thumbnails, but then once they get to the video, tell them, you dumb fucks, this shit ain't gonna happen. But let's look at the magical chart in case you want to see it, right? Like something to that effect. I don't know how I'm gonna do it next bull market. All right. All right. Anyway, so I put your BTC micro channel lines on my chart and price is hitting. Yeah, Brokoshi, it really does. Channels work. They do, micro and macro. Yeah, it's something else. All right, I'm glad you're liking them. Hey, Tim, have you ever seen the Amazon Bitcoin comparison chart? If so, what are your thoughts? The Amazon to Bitcoin comparison chart. No, but I can make it right now. You might mean an overlay. So both of the charts together is probably. There are two ways to do this. You could do Bitcoin. You could do Bitcoin divided by Amazon, or you could overlay them, which isn't honestly a good way to do it, in my opinion. But I prefer to divide things. Let's take a look. So I can do add. Shit, how do I do this? Oh, where's one of my team leaders when I need him? He walks me through the. Oh, here it is. Okay. Oh, AMZN. Sorry. All right. So the overlay. Oh, yeah. Well, actually, this does look. So the reason I don't like this is because there it is. All right there. Yeah, Bitcoin follows Nasdaq and S&P because the entire price is literally 90% dictated by traditional finance bots, which is trading Amazon and Tesla and the indices, and it's literally just following the S&P 500 index. I think it's following that a little closer than it is to Amazon and the Nasdaq index. But yeah, it's going to do similar stuff because Amazon is a leader. It's similar to being the Bitcoin for that whole exchange, right? That helps be a market leader. If Amazon goes down a lot, then a lot of tech stocks will go down, even if nothing crazy happens, because it'll affect the index and people start selling off. However, the way I would prefer to do it is by. How do I take this off? Oh, here we go. Boom. I would prefer to do BTC. Like the ratio. And since June of this year, they haven't really deviated that much. And Amazon, so when this goes down, that means Amazon is gaining on Bitcoin because the denominator gets bigger, making this number smaller. So when this goes down, that means, this is Bitcoin versus Amazon. So this means Bitcoin outperforms Amazon, underperforms Amazon. So right now it's underperforming it. So every time Amazon is going up a little bit, Bitcoin on a percentage basis goes up less. And every time Amazon goes down a little bit, Bitcoin on a percentage basis goes down a little bit more is what this is saying. So really Bitcoin is technically since here, when is that? May of this year, Bitcoin has been separating from the stock market in the bearish sense, not the way people theorize it going. It's separating in the bearish sense, right? And if you want to kind of see this same chart exaggerated, just get a little bit more exaggeration here. You can square it to see an even bigger effect. So Bitcoin really outperformed Amazon back in 2017. But look, this bull run, I mean, hell, it didn't get over here. Look at that. So, I mean, Bitcoin barely, it didn't outperform it very much at all. Look at that. So Bitcoin did not make very good gains on the stock market this bull run. See that? Yeah, I kind of like the squaring the denominator because you can see, the difference a lot better, see the effects of it. So that's why I prefer doing it this way as opposed to an overlay, because the overlay gets funky on Tradingview and it's just easier to see like reality this way. I mean, hell, look at Bitcoin's inception in 2014. Like, look, watch. It's where it was versus Amazon in 2014. Or no, that was the peak. During Bitcoin's peak run, it got to where it was versus Amazon back in 2014. It's not looking very good. Even though I felt that this bull run was pretty hot for Bitcoin, but it got hot really fast, and then it did not sustain, kind of like 2017. And also the stock market was racing up a lot more heavily this time as opposed to how the stock market did here. So the stock market was not nearly as aggressive up because they didn't have quantitative easing, essentially fueling the stock market. All right, cool. So let's go to. Hey, Adrian, welcome to it, to the Curtillion YouTube tier. Hey, so Papa Longball, damn it. I told you I'd laugh every time I see it. Hey, Tim, have you ever seen the, oh, no, that was your question, Papa Longballs. I just forgot to say your name. Okay, shame on me. It's a fun name. All right, Adrian, when do you start deciding which alts you will get into when you believe the bottom may be in? That is a very good question. Oh, it's honestly just a guess. Because if you wait for, okay, let me, okay, so you have two vectors, two ideas, right? Is you want more confirmation that a bottom's in, right? But the more confirmation you get, the worse price that you buy it at. So if you want this vector of, like, you know, certainty that the bottom's in, it's a good time to buy alts. You want it really big. Well, also, the deal that you're getting is not so good also, because that means price has been going up for a while. But if you're okay with, you know, if you're making guesses on the way down what bottom is, you have way less certainty because shit's tanking and you're guessing it's a bottom. And this vector essentially will flip and you get a better deal. So the less confirmation, the better deal if you're right. But only if you're right. So there's a sacrifice. More confirmation and less risk equals less gain. So it's risk reward, essentially. It's a direct correlation. That would be the basis of my answer. But I mean, the one tool that I think is pretty basic in to have that large vector of confirmation on Bitcoin is simple. And you did ask when, right? When you believe the bottom. So when do you, yeah. So your question was when, not what altcoins. And yeah, the question of what altcoins is also a guess. It really is. Like as hell, because people who are buying Cardano, which looked like it was going to die last time, it was the worst performing major altcoin, lost 99% of its value. They saw 135x from the bottom. Now, not many people bought the bottom, and those that did, they didn't buy a very large amount down there. But still, it's a hard guess. I would prefer to buy things that are strong that didn't go down as much. But then your risk reward ratio. So the easiest way to do it is for that confirmation is the cross of the weekly 21 with the weekly 10. That's your confirmation of when. If you want to front run that, so if you want to front run this red cross above yellow, then you wait for 2 weekly closures above the weekly 10, because that gives you an increased chance that the bull market is getting ready to go. So here, I think there were 4 weeks. If I go to the weekly chart, so I'm on the daily, I think this was 4 weekly candle closures. Then on the 5th week, kablam. So if you could front run it on the 2nd week, good. If the 3rd week closes above also, that's even better. Like, that means, yeah, if it hasn't pumped yet, it's like, oh shit, the 3rd week is probably even better. But if you want to front run 2 closures above in a bull market, and then wait, like, don't go. So if you have $10,000 you want to throw at crypto, don't do all 10 on the 2nd closure, because then it can just go straight back down, right? 3rd week, do a little bit more. 4th week until it starts going up. And if it goes down after that, like it did one more low in the previous bear market. So this is 2014, 2015. So you had that cross and it made another low, almost as low as the capitulation, right? So then you would, and let's see how many weekly candles closed here. Let's go to the weekly chart. Oh, this is 2012. Right here. So you had it got really aggressive really fast. So on the second one right here, you would have been buying some. Third one maybe get some more. Then it starts really taking off. This would be a bumper for tap. So you can see if I take price off, this cross, it undid itself. Can you see that? So it's not like 100% signal, but that is just the surest way that I can find is red crossing above and again, this is the weekly 10, this is the weekly 21. So that would be my answer. But if you want to finesse this, the less volatile it is, the better around the 10. So as it's crossing the 10, you want it less volatile. Because if it's more volatile, guess what? It means it's probably going to come right back down like it did there. But look at the difference in 2018, 2019. Watch. It creeped up to it. The volatility like went real low. Look at this. So this is this is 2019 after the 2018 bear market. So look at this. This is the weekly 10 right here. So you have, even creeping up to it, 1, 2, 3 weeks, very low volatility. 1 week above, 2 week above, 3 week above, 4 week above, kablam, 5th week. Like this was just a perfect setup. Yeah, and that's how you can front run. But you wouldn't want to go all in on that second candle because it is possible, it does a fake out play, does one more low, and then takes off, right? And that is my best answer that I got. The weekly 10 going above the weekly 21 and looking for less volatility as opposed to more volatility. And that's good. So, just look at this. We haven't even gotten, did we get one? Yeah, we had one candle close above. That's why I say wait for the second week because this is all just a trap. Or just a big rally that ended at the 10. A lot of rally, it wasn't really a trap, it was a rally. But the rally ended. Why? Because people at the weekly 10 started selling. Because it is in my opinion, the single most important indicator that you can use on the chart or the price of anything. Weekly 10. Or at least in crypto. I don't actually know if that's an accurate statement for stocks. It might be the weekly 21. I really don't know. It might be the daily 10. Because the stock market is just fueled by people dumping money in their 401ks and it just goes up forever. It might be a smaller EMA than the weekly 10. All right. Very good question. Is it possible? Okay. So is it possible it's already been priced in tomorrow's? Okay. So Adam asked a question about the FOMC, 7,500 point rate hike and Fed Powell speaking for the US Fed. Is it possible price has already been priced in for tomorrow's Powell news with the assumption it's 75 basis points? Yeah, definitely possible. If it's 75 basis points, I could see a rally all of Thursday and Friday. I don't see it really going beyond that because, like I've shown a million times, regardless of, whatever news, it's policy and news together. And global economic, all of those things together, they will make this chart. Why the hell did this happen? Is my first question. See, my chart is even locked and it's not supposed to be able to happen. But let me show you once I undo TradingView's freaking mistakes. All right. So the fact that Nasdaq futures needs to hit line A, and a lot of people say, there's no way you could have forecasted China collapse or you know, when I talked about altcoins dropping cross bad, a lot of people once people finally realized price was going down around March or April of last year, after I was doing all these, like I even spent a lot of time animating videos to try to get across to people. And then people just refused. Like, your analysis still doesn't work. It was all Terra Luna that caused this to, no, there's no way you could have predicted that. No. Crossbad made Terra Luna crash. So similar things. You know, I'm not predicting what will make the stock market get to that point. It just will. Like, things will happen to make that go there. That's just how it works, and it's extremely likely to happen. So yes, price can be baked in, but that's why I don't see a rally for much longer, because I don't see it getting over this local high here. Because this line, it's actually line B is probably going to be hit, but line A needs to be hit. Like, it will be hit. So I don't think it can rally much. This line's going to be hit. I don't think it's going to take out this local high. So maybe Thursday and Friday for my long-winded answer, but this is the composite of Nasdaq futures. Line A's got to be hit. All right. So Patrick, YouTube tier member, asked, did EWT bottom? I don't even know what that is. Let's see. Am I looking at the right thing? Energy Web Token. Came out in, March 2020. There's the weekly 10. There's the weekly 21. It's about ready to get that cross. Look, it's close. But a lot of times what happens is price will run up above it, and right as it's ready to cross, that's when it comes right back down. So I mean, it's certainly a big rally, but it's very possible that is it. Because that cross just sometimes, like, look what happened up here. Look, it tried to get this cross, and it looked like it was going to do another run, but it just did a skim play. So that could happen again, and it comes down. So no, I mean, I don't think it's safe to say it's bottomed at all. Plus, you're still in a weekly downtrend. So take off these EMAs. Look at the week. You have high. No, you have a low, a high, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high. So you're in. So I think the daily is probably in an uptrend. Yes, it is. But the weekly is still in a downtrend. So with the weekly in a downtrend, I don't think it's safe to say, I don't think it's safe to think it's 50% likely to have bottomed, independent of Bitcoin. This is even independent of Bitcoin. Let's say this is not tied to Bitcoin pressure down at all, right? It's its own asset. It's in the stock market. We're looking at the price of something in the stock market. I don't think it's safe to even think it's 50% likely, because the weekly needs to stick a higher low. And then if it starts turning up at that point and then takes out this high after making a higher low, then I think you have probably a little bit better than 50% chance. But you need to form a weekly uptrend before. Well, the weekly uptrend would probably make it a little bit greater than 50% chance. But all right. That's my answer to that one. So no, I think it's less than 50% likely, but it looks fairly healthy on the daily. All right. All right. Let's see here. Appreciate your answer as usual. Okay, perfect. All right, bro. Koshi, no, oh, MATIC and Ape. Yeah, we'll do MATIC. MATIC has been a little bit on fire, not quite as hot as Atom. So we're going to take a look at some longer term targets and then zoom into the short term timeframes to get a feel for what MATIC is going to do. Is it going to break down and hit a lot lower? Is it potentially trying to form a base here? We're going to try to answer those questions and give you the right tools to figure it out and know when to pivot. So here we go. Give you some good pivot points on when things become more and less probable. All right. I made these targets down below when MATIC was still like making this, having bearish divergence, squeaking out this last high. So I've had these boxes here for quite a while. And no, I did not retrofit it to this wick. This wick hit exactly where I had the box, right? It's obvious. Buyers are going to step in here, period. Honestly, it still looks like if Bitcoin takes out its 17.5 low, $17,500 low, it's going to trigger Bitcoin to go under 15K. Would this drop 74% from current price? I actually don't think it would. Immediately. I think the only way that this lower box under 20 cents from 10 to 19 cents would be hit is in an extended period where Bitcoin has, so let's say this, let's overlay a Bitcoin chart. So, Bitcoin's doing all this stuff and, Bitcoin's here. Let's say Bitcoin has a hard move down to 14,000 bucks. At that point, MATIC would probably just wick below here and zoom right back up. It probably would come up shy of this. Maybe not even that deep. It probably might just hit this box again, honestly. and then find support here. But the way it would hit this box down here is if Bitcoin spent a significant amount of time in a range, let's say between, so if it goes down to 12, let's say between, 18 to 25K or something lower, a $7,000, $10,000 range. So I'm piecing together a few concepts here. I'm showing you how MATIC would hit this box. It wouldn't happen as Bitcoin bottoms. It would happen later. Altcoins bottom after Bitcoin bottoms, and I'm showing you why. All right, so apply this to everything. So the way it would hit this box is not in the exact moment Bitcoin bottoms. It would be that Bitcoin dominance begins to rise as Bitcoin consolidates, so that every time Bitcoin consolidates and goes up in a rally, altcoins go up a little less. Like that. Less. And when Bitcoin goes down a little bit like here, altcoins go down a little bit more. And then Bitcoin goes up a little bit, alts go up a little less. When Bitcoin goes down again, alts go down a little bit more. You see what I'm doing here? And when Bitcoin goes up again, they go up less, then down more, then down more. And that's what would get MATIC down here. It won't happen I don't think Bitcoin at 14K would even bring MATIC that low to 18, 19 cents. It would take an extended period of time in consolidation as specifically Bitcoin dominance, raises up to 45 to 50%, something like that. But it was an if. Right now, money flowing into crypto is more interested in altcoins. I hate to say that, but it's true. I try to step away and see facts in the charts as much as possible with as little bias as possible. I don't like it that most of these projects that are going to be gone in 10 years anyway are essentially they are outperforming Bitcoin. That makes the thing that makes all this shit possible for these other cryptos, but it's an if. I don't know if MATIC will hit this because I don't know if Bitcoin dominance will rise during a consolidation after a low. As of right now, it doesn't look like that'll happen. So honestly, I'm not for sure if MATIC, I'm not going to say bottomed, but MATIC has a damn good chance of forming a double bottom, even if Bitcoin consolidates down low. for a year because I just don't know if Bitcoin dominance is going to rise or not. It's baffling me. Even though, even kind of figuring in, there are more altcoins in general that automatically puts Bitcoin dominance down. Okay, I get that. Stable coins, people don't have to sell into Bitcoin anymore, which like you had to prior to late 2017. So obviously Bitcoin dominance will never go to 90% again, 80%. I get that. Still, it feels like I could tell in the charts, like so many altcoins are outperforming Bitcoin. That is weird. It's strange. Altcoins are doing well in this bear market. And if that continues, MATIC ain't going to hit this, and it's probably going to do something similar to a double bottom. If that continues. But the scary thing about it is, so I'm getting off of MATIC here, but it applies to MATIC and a lot of other things. If the market wants to correct all that in one swoop, that means Bitcoin dominance will fly up and altcoins will lose 70% from where they are now, which means MATIC would hit there. But I just don't know if that's going to happen. I don't know if altcoins will stay strong in this bear market, how they are now. The big, the blue chip altcoins, the big ones. I don't know if that's going to happen or if we're going to have a clean sweep and all the work that they're doing versus Bitcoin right now will just give way and they all just finally go to where they freaking should be, a lot lower, especially the ones like Atom and MATIC that are doing pretty well right now. I don't know which is going to happen. I really don't. And it's going to be exciting to see this bear market because altcoins are doing, or the big altcoins are doing very well. Yeah, most of them are like, hell, how far down is MATIC? Like 75% from its high? But it never should have gotten this high, right? I mean, this is just speculators doing stupid shit because they don't know what they're doing. Yes, it's 75% down, but that's still strong for a bear market. This deep into a bear market, it's way stronger than last time. So that's what we got for MATIC, plus a lot of other stuff that applies to other altcoins. All right, you said Ape. Ape almost burned the shit out of me. But I got lucky and I closed it at break even. But it had like a 20% run. And I think I took that trade during a live show and I forgot to put it on isolated as opposed to cross leverage. And so on higher leverage plays, I put my risk management is my entry. So if I'm stopped out, that means I've just liquidated a higher leverage, but that's fine because I didn't risk a lot, right? I didn't put much on it. So I'm fine blowing through an X amount of dollars because I know I'm risking that. But I had it on cross and it started dipping into my public account, which isn't a lot of money, but it's still, it could have taken out my whole public account. But then it came back down. Whew. So if you're ever trading and you see that an exchange allows for cross leverage, take it off immediately and just like burn it. Similar to if you ever, the best thing to do if you ever buy a light duty hose, specifically light duty as opposed to heavy duty or medium duty, just immediately go home, unpackage it, cut it up and burn it because it's useless. Right? Burn it. Anyway, Ape, here we go. Yeah, I about burned myself pretty bad. All right. But that's what I get for trying to take a trade on leverage during a live show and not paying attention, not putting due diligence in it. Okay, so it fell off this cliff here, and I was in profit for a good amount of time. And then, I about got burned there. So it's a good thing I got out here. Whew, yeah, because this is where I took the trade. Right here, no, it fell off this cliff. And it came back down. It did. So good thing I got out right there. Whew, it went up again. Whew. Wow. Yeah, it's a good thing. All right. This is ridiculous. I don't know what the hell this is doing. This is not bearish, I'll tell you that. It's not going to hit the top of that channel anytime soon. Might just have to make a double decker. And this worked really well on Ethereum. Trying to get the everything equidistant here, so bear with me. I'm turning my head sideways and stuff. Okay. Yeah, this honestly, as of now, this is another candidate, possible. Similar to MATIC, like I said, it's possible that the worst it does is a double bottom. And it's possible on this coin, given that money's flown to alts, it's possible the bottom's in for this. This is a decent candidate for that. It's only 80% off its lows, but the structure it's putting in, it looks like it just could go sideways for a while. And maybe have one wick down if Bitcoin does a 14K and continue to do this. I honestly can't tell what it's doing, but it looks like it wants to go sideways in some type of macro range, like a horizontal range. It almost looks like it wants to play from here to there. It looks like it's going to continue going sideways and maybe hit up here first, come down, boom, boom, boom. Play with a horizontal with a descending channel. Yeah, honestly, I would be kind of surprised if it broke back into this bottom channel. So worst case, I would say, is it crashes down here and uses this as support. So if it does hit this line, I think it would have a strong chance of being used as support. With one exception, if you see Bitcoin dominance skyrocketing, that's when it'll break in back down, because that means you're going to get a clean sweep, right? Alts will go back to where they should have been. They shouldn't have been outperforming Bitcoin this whole time. So you got to watch out for that. That would change my analysis. Bitcoin dominance would. If Bitcoin dominance starts screaming, yeah, it's not going to use that support. Not only will it break down heavily, but it's going to break into this channel again. Making sense? But yeah, this is not a bearish price action in a bear market. All right. Okay. With Arnold and Humpty Dumpty. Yeah, I did. Yeah, I tried. I put music on it to get people to like understand cross-pad. Like this is, stop listening to what do you call it? Plan B. I even made a video showing why he was going to be wrong before he was wrong. Before anybody was even thinking that. Seriously, go back on my channel. It's the thumbnail. It was probably in November or October. It's a thumbnail with a grave that says "Rip stock to flow." And I showed exactly why. And it was all in the Ethereum chart. And what I projected happening on Ethereum happened. And it brought everything down. And yeah, I think Ethereum led the market down, actually. I could see it the way, and it was from channels. It was just following channel rules on Ethereum. Bitcoin had different stuff going on. So Bitcoin technically could have kept going above 69K. And it was consolidating above its prior highs. It looked like it was going to go up, but Ethereum was saying, not going to happen. All right. Yeah, so I maintain that I think Ethereum, or at least visually, structurally initiated the bear market. All right. Okay, here are some new ones. DCF community member. Okay. Eagle something, EGLD, bottom target of BTC hits. Okay. And optimism. All right. Well, the A and B lines DCF are from Nasdaq futures, but that would also bring Bitcoin down as well, right? So the ticker EGLD in both of those scenarios. EGLD. Oh my God, this looks like it had a big run. Wow. Yep. I mean, that is big, but compared to Telcoin or what was it? Rune might have had the biggest. Rune and Hex had, I think, the biggest runs, but that's pretty big. Damn. Okay, so it's falling off this cliff. You actually you got several areas of support here. So this, even though each one down probably is 30% lower, but it would go. All right, A and B. So if Nasdaq futures only hits line A and bounces, or hits line A and Bitcoin separates and crypto separate from the stock market, I think if A is hit, then you'll get a wick past here, but it would zoom right back up to get above 35 bucks. I think it would pierce this, though. It might go as low as this. It might hit 27, but if line A is only hit, it would probably wick past 35 and then come back into this box. If line B is hit, that means Bitcoin is going down, for an extended period of time. I would say, you're looking at the $23 range. And if Bitcoin dominance continues to rise while it consolidates for a year and a half, it would drop even lower than this. But that's because I don't know if Bitcoin dominance will rise, because right now it's not. And if the trend is the trend until it is broken. I really don't have any reason to assume Bitcoin dominance will skyrocket. As much as I want it to, sticking with what's in the charts, I really have no reason to. I don't even think it's probable. Unfortunately, I want it to be. I really do. But altcoins are going to fare better this, or at least the blue chip ones. So microcaps aren't. They're all going to go down 98 to 99.5%. All of them. Literally all. The small and microcaps. But the large players, they might squeak out only having gone down 90% or something like that. I know that sounds weird to new people. Only 90%. Well, that's pretty good. Cardano went down 98.77, just shy of 99%. So yeah, only 90%. You want to see the difference? Look, it's a massive difference. Watch. So from here, actually, let's do it from the top. Watch. On this asset right here, this is why I say only 90. So right now, 90 is at about $54 even, right? Actually, to this box. All right. So that is 90% down is right here. Okay. Now, again, I'm getting ready to show you why I mean only 90. It is a huge difference. And if you've never seen this before, prepare to, just be like, holy shit, I didn't realize that. Because I had that moment too. 99%. So let's go to where Cardano lost. Cardano went down 98.77%. Okay, that is at 6.68. Okay, the difference between there, if you go down 90% and then go down another 90%, so just shy, then that's 99%. So going down 99% means you go down 90% and then you go down 90%. All right, I had a pause in my streaming software, sorry. But yeah. I think it's I'm watching myself speak about 20 seconds ago. So, yeah, 90%, then another 90% is 99. All right, roughly 99. All right, take care. All right, perfect. Yeah, I got through all the tier member questions. I got to get out of here. I've been tapped out on my office door only once now, but that means the wife is probably hungry and is probably wanting me to cook. So I will wrap this up. I'll see you on Thursday at the same time. Be safe. And again, Wednesday is going to be very, very volatile. So don't be pissing around on futures if you're new. And even if you're not new, don't do it with a ton of money because it's going to be crazy. You're competing against the most expensively built and most R&D into it, and high amounts of money. You're competing against the best bots in the world. Like, it's just not wise to put a lot, on the line. Okay, so be safe on Wednesday with FOMC. And again, even if it's bad news, the market can rally for a day and a half or two, like until Friday. Doesn't mean it's going to go straight down. Bad news can mean, hey, we big players know that everybody's putting on shorts, so let's go liquidate them and stop them out and then make it go down. It could easily rally for 2 days, even if it's bad news. Keep that in mind, and we'll